Hey, good afternoon, everybody. It's Mike. It is Friday, the 10th of March. This is our weekly recap. It goes out to all my members and everybody that follows me on my email list and social media. If you want to join us, please come on over, click on smartoptiontrading.com. There's a link in the description below. You can sign up for $25 for the first 30 days, cancel anytime. If you weren't with us today, we traded with our heads on our hair on fire today, and it's been a wild couple days in the market. And let's talk about what's going on here. So after a nice rally last week, we kind of faltered this week. We were rallying yesterday off of a high jobless claims. The market's looking for the Fed to not raise by 0.50 basis point hike in a week and a half. And then a funny thing started to happen. The market started to fall apart as it started to catch on to what was going on with SIVB, and you had Jamie Dimon documents involved in Epstein at the same time, and then you had Vice Chair Barr coming out and being very, very negative here on crypto and saying any bank exposed to it's in trouble. By the way, continue to see a plethora of buying, insider buying on the banks here. So that came out, and we got a big follow through day today as we broke below the 200-day. We put in a new range low down here on the SPY at 384 area. Is this game over for the markets? I don't know. There's a lot of problems. There's a lot of fear for the first time out there that we haven't seen in a while. We have volume. With 20 minutes to go, we're at 150 million shares. We're going to finish 180 million shares without a problem today. The market is worried about what's going on at SIV. Now, I'm going to tell you right now, I am now long some call butterflies. Jay in the room called them out. Thank you, Jay. Great idea for Monday on the SPX. My theory is we're just way too far down too fast, and we're going to get some type of bounce ahead of CPI on Tuesday. CPI is on Tuesday morning. The president came out and has already hinted it's going to be a good number. I've never seen a president come out and said, I'm expecting a good number, and it hasn't happened, meaning they've already gotten some peek at what's going on. So the market is probably going to take this into account. What the market really has to figure out here is what's going on with any contamination with SIVB. So SIVB, if you haven't been paying attention to it, it was a very innocuous to start. Yesterday morning, pre-market, they did an offering. They said they're liquidating some assets that they had problems. The market didn't care. It didn't react. Look at the size of the gap down. Sometime around 10 o'clock, the market started to react. It closed on the lows at 100. To this morning, it never opened. So what came out here pre-market as it kept diving here, as it got down to 33, was that their attempts to raise capital had failed, and they were now seeking basically a fire sale. And sometime in the early morning hours, the state of California stepped in and seized their assets, and the FDIC has also come in, and they are no longer existing. If you own the stock, I'm sorry. Nothing better to say about that. If you own the stock, there's a good chance you're never going to get a penny back out of it. If you have deposits with them, the FDIC is going to insure them up to a certain point. So this has caused massive contamination here in the markets and the financials. We had a huge down move on the financials. JP Morgan got absolutely rocked, but came back nicely today. By the way, we traded JP Morgan. If you were with us pre-market, we talked about looking specifically on JP Morgan for an oversold bounce today. Wells Fargo got rocked. Bank of America, Citigroup, right? These all got rocked on this. The regional banks are getting destroyed. If you're not paying attention today, we've been talking about in the room for the last hour, seeing a tremendous amount of inside buying in the banks. That's generally a good sign. That means the contagion probably is fairly low. What else is going on today? We had non-farm payroll that showed that wage growth of non-farm payroll that showed that wage growth had declined, even though the jobs number was higher than what was considered to be the average. Not a problem there. You have names like Tesla that held in well today, despite everything going on. Are still actually almost green here, or right on the verge of it, holding above the 50-day. Meta held in and gave some trades to the long side today. I'm not trying to sugarcoat this, guys. There's nothing great here. We caught Boeing, some people in the room, for a quick news trade as the 787 was relit. And then you have the VIX. The VIX has soared the last 2 days. We noted last week that 50 Cent, that buyer guy, had come in again. This guy got paid. We're still out of the Bollinger Bands, but we're well off the highs. The other thing going on here is bonds have rallied. This is a flight to safety. This is not like, we want to see bonds go up. This is bonds not going up because people are buying them because they like them. They're buying them because they're flying to safety and yield. So where do we go from here next week is the real question. Over the weekend, there's going to be a lot. You're going to see if somebody comes in and takes SVIB off of, basically just takes them out. It wouldn't be a big buyout, it'd be an absorption. I would look for the likes of a Berkshire or a BlackRock, maybe a JP Morgan to come in and maybe swoop them up if they think their assets are worth enough. Then the question is any contagion come out of here? And if that doesn't happen the case and we get a good CPI number, we probably rally. Right now, it's all hands, be careful. When we say we're long next week, we're not long big. We're taking some small trades here. But overall, the market gave trades this week and today. Today we were in and out of the ES, JP Morgan. I even shorted the VIX. First time I've ever done that for a little couple bucks. But the bottom line here is a time to be very, very careful. We're out of the Bollinger Band. We're about 10 handles off of the 8-day. Could we go more? Yes. We're very oversold on the oscillators. And what I mean by that is we talk about this every morning in the room. We are now negative 369 on the NASDAQ, and on the New York Stock Exchange, negative 312. And, if you look at these numbers, you can see we don't get down these levels very often. That's a 1-year chart. We went to a 5-year chart. And you can see these are numbers that, didn't work on the weekly. Interesting. All right, well, one more way to kill a cat. There you go. All right, you can see, back here, you're back at the lows of the pandemic in these places. We don't get down this far very often. So I would say this to you, if you're playing the markets here, I would favor a bounce on Monday of some type. Maybe we open up down reverse and we get a great long trade out of it. But overall, I would be very careful just shorting down here unless the news is so bad over the weekend. If that's the case, then we have huge problems, and then this market's in major, major trouble. Last thing I want to leave you guys with this, and I know I've talked for a while tonight, it's very disconcerting that the Fed can never shut up and has to speak over and over again, and they have said nothing today. The Federal Reserve should be out saying things are okay. They should be out saying, because the last day they can talk to the Fed meeting for a week and a half, we're okay, we got it, and they haven't said a thing, and that's very disconcerting. This is where the Fed should step in and say something. With that said, I'll do charts over the weekend. I'm going to wish you guys a wonderful weekend. And I'll tell you what, get your shopping list together here, because one way or the other, opportunity is about to come knocking. Good night, everybody.